Great to see you, Jeremy, Shamir, and Dan.
Same.
Guys. We may have lost Jeremy there. Unfortunate. I saw him briefly.
Well, let's kick it off with you guys. Dan. I mean, Shamir, I know you were just on the last panel, but Dan, for those who don't know you, why don't you just give your quick intro so people know who you are?
Yeah. So I worked for Jeremy for going on 5 years at the point, but so I ran Circle Trade. There he is.
There he is.
There we go.
Built out that OTC trading operation, was involved in a lot of the market-related stuff that we were doing at the time. And then most recently jumped on CMS Holdings, which is basically a prop trading shop that we got going on 7 months now. So that's been a fun ride. Been very interesting time in crypto. But I guess in terms of relation to this panel, I obviously know the USDC sort of building of that through Circle and all that jazz, and then dealt a lot with Tether over the course of the years. So can speak to that in any capacity you guys want to hear.
Yeah, absolutely. Jeremy, what about, I know everybody knows you. I hope they do at this point, but what have you been working on lately? What's been your biggest focus right now?
Yeah, I mean, basically, obviously, we've been building up the USDC ecosystem over the past couple of years, and that's grown really significantly. And then early this year, we started rolling out a whole new suite of products, basically taking a lot of the platforms that Circle has built up over the years to support consumer products and institutional products, and turning those into platform services that other companies can build on. So that we kind of call that Circle Platform Services. And the basic idea is we think that stablecoins are going to become sort of fundamental kind of fabric of the internet economy, and very deeply used in commerce applications broadly around the world, in financial applications broadly around the world. And so we're building platform as a service models to help businesses really of any size and scope, all the way up to major financial institutions, tap into the innovation of stablecoins on public chains.
That's incredible. That's awesome to hear. And Shamir, I missed the bulk of your earlier presentation. I'm going to look forward to seeing the recording, but how does Sela play into kind of the stablecoin space here as well? Because we heard from Dan and Jeremy more on the USDC side of things.
Yeah, so the core mission of Scylla is to make it easy for any developer on the planet to build and ship a financial application, and do it, in a secure, compliant fashion. The core product said restore HTTP APIs and SDKs, which allow you to onboard users, link bank accounts, debit and credit those bank accounts. And on the back end, we issue a stablecoin, an ERC20 token. So every time you take money out of somebody's bank account, you put a stablecoin in their wallet. Anytime you put dollars back into their bank account, you destroy, destroy those tokens, right? In between, you can program with it's just another ERC20. And the combination means that you can hook into the traditional banking system, build an application quickly and easily, and then you have all the power and flexibility of crypto on the back end. I think the major difference between us is we're a platform first company. We don't have any end user products. We love supporting our customers who build those, but platforms are sort of, that they have been my passion now for like the last decade, right?
Got it. That makes a lot of sense. Well, guys, let's get right into this. So Tether's got what, 8 or 9 billion issued right now. I think USDC, I think you guys are $700 million market cap, something around there. Kind of feels like Tether's taking the cake here, but Jeremy, you guys have made like considerable progress with USDC and building out that community. I guess, how do you guys feel about a winner in the stablecoin market? Is that going to be a thing, or are we going to have like, Tether, USDC, GUSD, TrueUSD, BUSD, and all of these stable coins? Yep. Yeah,
I mean, a bunch of things. Obviously, we're really happy with the growth in USDC. It's sort of 75% growth just over the past couple of months. So it's accelerating, and like ecosystem adoption is accelerating. And I think we're about to go through a really critical inflection point in our industry, where major financial institutions, major players in the global payments ecosystem begin to adopt these kinds of standards like USDC, and and really move this from the early market where, all of this stuff grew, very much out of the crypto trading markets, right? This is sort of better pipes, better market infrastructure for moving value around for trading. It sort of gradually started moving into the DeFi space, which is sort of a natural extension of the crypto markets. And so you sort of see, for example, like Compound USDC is like by far the largest stable coin in terms of what's locked up there, and it does well as a credit market around USDC. But I think we're right on that point where this is going to start being used more broadly in payments and settlement in many different types of use cases, and it's going to get plugged into some of the rails of some of the major players in the existing payments ecosystem, and that changes this from just crypto markets into being kind of a core part of how the internet moves value around. And so, in my view, we're still in the pretty early innings of this. If you look at the amount of market capitalization in dollars of different forms globally, it's many trillions of dollars, and then the number of assets that are denominated in dollars, et cetera. But we're still very early. I think our belief from inception with this project, with the formation of Center Consortium and the creation of USDC, was we're taking a long-term view, and the long-term view is that if businesses and financial institutions and others are going to depend on a stablecoin as a way to settle transactions or store value, they're going to want it to be audited, transparent, regulated, and ideally be a standard that lots of people are building on, and not just individual stablecoins from individual companies. And so I think that belief still is, we have very strong conviction about that, and we would expect that market capitalization of dollar stablecoins over the coming years would certainly reach into many tens of billions of dollars, and eventually hundreds of billions, if not trillions.
Yeah, no, I'm with you there. And sorry, go ahead.
And I was going to say, I'm not even sure market cap is a great metric for this revolution, right? When you look at like payment systems as opposed to stock trading in kind of the pre-crypto world, you wouldn't have thought of evaluating sort of Fed ACH versus SWIFT versus Visa based on the market cap of those companies, right? You would have looked at transaction volumes, number of transactions, dollars transacted, adoption, the number of countries, those sorts of metrics. And I think the market cap, I think, is misleading here, right? I would be much more interested in seeing sort of like where USDC or Tether is being used, or Scylla is being used, who's using it and why, rather than sort of the amount of the amount of tokens issued. There's a lot of—
Shamir, not to interrupt you, but wouldn't one precede the other? Like, I mean, all of the minting by Tether and USDC clearly shows that like there's a lot of demand for this. People want to use it, stuff like that. So don't you think that if people have the demand for this, then that will drive fundamentally kind of the value of Circle at the end of the day?
It also, just to jump in there, like I think like the monetary base that exists in circulation is really important, because what you want to do is you want to have this, you want more and more funds on chain. The benefits of being on chain is that you can settle at the speed of the internet. You can wrap it into a smart contract. You can use it more readily. And so I think it does matter how much is in circulation. It matters what the daily liquidity is on that as well in the different venues, et cetera. But I think it does matter how much is tokenized and on chain. And I think our view is, if you really want to get this embedded in a much broader range of financial applications, in particular financial contracts, where you're locking up value or you're transacting in a financial contract with that value, you've got to have that on chain. That's really, really critical to that. So I think it's really important. I also think the throughput and the payments volume is important. I mean, one of the things we publish how much we've tokenized, which is many billions, but also how much we've redeemed, which is like, it's $1, you can always get it out. And so people are using it both ways, bidirectional.
And I think that's the critical part of it, right? Like when you're looking at the stablecoin space, I'm not surprised, even if you guys have a few 100 million outstanding, you're probably created and destroyed a lot more because of redemptions. And I think you end up missing that story, because if there's a lot of use cases which we see a lot of, by the way, which is just create, transfer, and redeem, you might have a very low market cap, and that might miss the fact that there's a lot more usage happening. So I think market cap is not unimportant, right? Like the size of the Fed's balance sheet matters in terms of like how many dollars they've created. But for payments specifically, you have to take it in context with all the other metrics. And it's important to look at those things as well.
Dan, just switching to you, just to kind of put this in perspective for the listeners and the viewers here. You know, a lot of people think of like stablecoins and they think of like Venmo alternatives and stuff like that. You're actually using stablecoins for like OTC settlements and kind of like, I think you mentioned stablecoin denominated futures, stuff like that. How does stablecoins, crypto dollars, whichever we're going with here, play into, you know, your business and how you conduct business daily?
Yeah, so it's changed a lot in the last, call it 18 months. So a desk like ours, effectively, you don't really need a bank account anymore, which is kind of wild. You can just live in stable coins. Like, obviously, you're going to have to come home at certain times, right? And you're going to have to redeem, put that money into cash, and then like interface to traditional legacy system. But like less and less so as time goes on, right? So like most of the major OTC desks now will take stable coins, right? So if I buy 100 Bitcoin for you at some price, right? And we just do the whole thing in dollars, we'll just swap it with USDC sort of seamlessly after the fact, which is super useful. And that works because USDC is really fungible with dollars quickly, effectively. Like nobody really gets gated there. And most of these guys have operations with Coinbase, which makes it super easy to like swap through. So that's like a big thing that's changed. But I think the other thing is Tether in particular has become the base currency for a lot of derivative products, specifically out of Asia, right? So you have Binance with Tether-denominated futures. You have OKX and Huobi with like similar Tether-denominated futures. And that's a big deal because they're basically just getting out of dollars entirely, right? They're like, Tether, good enough. That's our like word of God of like, what is a dollar in our banking system? And like I say banking system because like none of these guys have bank accounts. Like there's no actual cash moving through the traditional rails, but they're still using Tether sort of for that base thing. And like that's really why Tether's sort of gained as much as it has. Like everybody's grown a lot. Like stablecoins in general have like gotten a boom, but Tether's gotten a real boom. And that's because it's become like this just unit of account that's like seamlessly used throughout Asia and all these exchanges. And they all just sort of take it at face value that it is what it is, and like they swap around. So anyway, that's driven a lot of the trading activity that you see related to Tether. But like the other thing is there's a lot of Tether issuance going on that is entirely unrelated to crypto trading at all. We're like starting to see like real issuance of stablecoins that are used for like use cases outside of just like, I want to speculate on the price of like some crypto asset going up and down, and I need to have Tether as my currency to like do that. So that's a little bit of color into how it like fits into all the trading mechanics.
No, that's really helpful because now we know what you guys are using this for, and you're top shop, so it's easy to put that in perspective. So Jerry and Shamir, going back to you guys, how do you break into that market? Because it seems like Tether has grown since it's kind of less regulated. I don't know what the right PC word there is to say there, but like, can USDC, can Sila actually take on Tether or soon Libra if you guys are more regulated than Tether is? Because I've always see tweets that people are just using Tether in Asia because it's just so easy.
Yeah. I mean, I think there's a few things on that. I mean, first of all, we are seeing steady growth, and we're seeing steady growth from very professional trading firms. So if you ask most professional trading firms, like I think they would like to denominate in USDC because they know it's actually there. They know that they can actually get liquid in it in the banking system, and so that is certainly real. From our perspective, though, the end game isn't like being necessarily the largest volume stablecoin in the crypto trading markets, right? I think our view is that the use cases on this are going to go well outside of crypto trading markets. That it's going to expand into a much broader range of payments, commerce, and financial applications. We're betting our entire company on that. And I think over the next 6 to 12 months is going to be a really critical time when basically, in part because of Libra, but also because of what's happening organically, where this technology is becoming, the utility value of this technology is really, really starting to take off. This is going to be plumbing that's going to be connected up to much larger platforms with real consumer reach and distribution, and much larger processing networks that have mass scale business reach as well. And so I think as you see that happen, you're going to see a different wave of usage that's coming into this. We're starting to see, for example, also more financial institutions that are looking at how do they do cash on chain related applications and transactions. They need a public chain digital asset to be able to provide for payments and settlement. They're not going to do that in Tether, right? They're going to do that in something that has some regulatory framework around it in the US. And we're pretty close to a world, and I put it, end of this year, where the regulatory perimeter is sort of established in terms of guidelines for, at least if you're in the G20, the way in which stablecoin issuers and the operations of those are going to need to function, and that's going to become law in a lot of places. I think there's always going to be a really big market for shadow banking out of Asia. I mean, there always has been a giant market for shadow banking within China itself and all around Asia. So shadow banking is a huge use case. There are people who don't want their money in a traditional bank and they want to live in the shadows. And I would include, there are a lot of players in the crypto ecosystem that I'd include in that. And so that is going to continue to be a use case that grows as well. And from our perspective, we're just focused on how do we just keep increasing the utility value of this in a broader range of use cases, connecting up to more and more payments, players in the payments ecosystem, launching our own broader payments platforms that people can utilize on it, and then continuing to just see the organic traction that we already have within the trading space.
That's really helpful, caller Jeremy, and I love your take on shadow banking. It's kind of funny to think about. But Shamir, I'd love to get your thoughts too on this as well.
Yeah, so the short answer of like how you compete with Tether is that we're not even going to try, right? I think there really is no reason you couldn't use Scylla to sort of like hold your funds as part of an OTC desk and kind of move it between different trading venues. But honestly, that's not a market that excites me, and I don't think anybody is using Scylla. I'm pretty sure nobody's using Scylla for that today. I mean, I watch the metrics daily. That all of our customers are building financial applications. They're building, pharmacy delivery in New York, or they're doing, land sales in California, and using Scylla as the plumbing infrastructure for that. That kind of is the mission of the company, is to sort of make the real world payments use cases and enable that with modern technology, the best of modern technology, and that is what crypto is, right? Fundamentally, it's just a much better way of managing value, programming with it, and doing everything with it. And so I totally agree with Jeremy. I think it's the first wave of sort of stable coins, and Tether is one of those, was really heavily used for crypto trading. And there's a massive crypto trading economy. It's huge, it's growing. That's a really powerful use case. But when you look at the kind of the real world of payments, right? Like, I think what's the bank in New York which does all the settlements for like everybody? They settle like 3 to 4 trillion a day. And so when you look at global payments and what the driving that, crypto is just like a tiny part of it, right? And I think that is where the future of stable coins is, and that's the future that I'm not sure is really I'm not sure that's really going to work for Tether, because you do need to be regulated. You do need to have sort of a deep native understanding of how to manage regulations in the US, across the world, and I think folks like Circle and us have that, and we focus on it. It probably does end up meaning that we just aren't very well suited for some of the shadow banking use cases. And at least, I mean, I can't speak for Circle, but at least for Scylla, we're okay with that. We optimize for serving our customers' needs, and probably won't end up capturing the kind of the Asian shadow banking space.
That's fair. It's good context. We have a couple questions I want to get to in the comments, but one last one for you guys, kind of on the big picture. How do you view the dynamic between, you have decentralized stablecoins, like let's say you have DAI, then you have like a consumer first one like Libra that could plug into billions of users, and then you have like an institutional one like USDC or Solo or Tether, take your pick. Do you think that we can have a world where we break into those three large buckets, or is this where, one or two dominate or one dominates? How do you guys think through the different segments that a stablecoin is trying to target? And this is for anyone.
I mean, some of these have to die. Sorry, you can go.
Go ahead, Daniel.
Yeah, there's just too many. Like, first off, like, there's no questions asked. There's like 5 different flavors of like packs, right? Like, that just doesn't make sense.
Yeah.
There's going to be consolidation. It's just time, right? Like, I mean, we're at this point where it's so new and nascent that like everybody's, even though it's got like a super small delta of like working out, like the upside's so big, there's not like huge entrenched incumbents besides Tether, and like USDC a little bit now. But I think in the end, you're going to end up with like 3, right? You're going to have this like shadow bank. Now we're like calling it like stablecoin, which like Tether clearly running away with the pack. You're going to have like the fully compliant regulated version, which is in this case USDC packs. Like one of those is going to become dominant. I would loop Libra into that, but because it's not fully fleshed out, like I can't really speak to like what it may or may not be. And then you're going to have like this DAI version, which is like one that purely exists in code, and there's no like dollars backing it anywhere. And like I think those 3 will exist like in tandem, because like DAI should never trade at $1. Like DAI, like in theory, it should like hover around $1, but like it's never going to trade 1-to-1 with it, and it shouldn't, because there's like risks associated with it that like have to be like encapsulated in that. So I think there's a world where you see those 3 like sort of like build going forward in the future. And I think there's room for all 3 of them in the system, right? Like they will feed a different niche of people that are like looking to do things. I think in terms of like aggregate size that they can get, there's like this USDC packs, like whatever, like that version you want to like call it, probably has the biggest like one that it can like grow into. And then beyond that, it's probably Tether. Like there's a lot of money that like wants to sit in vehicles like that. And then the last one is like these DAI, like fully like in the code sort of versions of it are probably going to be the smallest ones. That would be like how I see it all playing out. But there's going to be consolidation. There's just too much of this. There's like, as a trader, it's like brain damaging, because it's like, I got packs, but I need Huobi USD, but I got to go to USD. And it's like, this is not a good use of like time and resources, like moving between all these like things that are effectively, they're even custodied at the same places, which is like wild. You're like swapping money between the same bank. It's like sometimes that's like a little silly.
It sounds like you're spending more time swapping than trading, Dan.
I don't.
That's what trading
Somebody's doing it. Yeah, but like usually you make some money on it. It's just like it's all free.
But I think you got to separate between the approaches to stability and the use cases. Right, like so if you look at it, right, like there's the DAI approach, which is all code based, and trying to manage that so that it stays around $1, and then you have custodial approaches, and there's like at least 20 other approaches with some combination of that, right? And then you have to actually look at the use cases. I think Tether is currently owns sort of the crypto trading / shadow banking use case, but there's many others, right? Like Libra isn't even going after that, as far as we can tell. They're planning to try and plug that thing into WhatsApp and every other payment system out there. For us, we focus on the developer, and we want to be the kind of the developer first stablecoin, if you wish. But it is a custodial approach, right? Not a code approach. So I don't think we're going to end up with like just one stable coin to rule them all. I think we'll probably end up with, I don't know what, 5, 10, 15. But it's not going to be like traditional fiat currencies. I don't think we're going to end up with like 200 of those, in some steady state a decade from now. I think there will be some consolidation. So I'm with you on that one, Dan. Jeremy, what do you think?
I have a really different, I basically share Dan's view in terms of within the digital asset market and sort of how that will play out. I think the one thing I would add though is that I think a lot of people are thinking about this not quite correctly. And the important thing is that you need to think about these things as technical standards. And with the internet itself, the internet achieves scale when you have common protocols and common standards. Like when everyone agreed that MP3 was the audio format, every device maker in the world could make an MP3 player and everybody could listen to any MP3 file. when everyone agreed that, instead of doing their own online services, you were just going to use HTML and HTTP, then you had a massive explosion in adoption of content publishing. When everyone agreed that RTMP and WebRTC was the standard for audio and video in browsers, now we can do all the shit that we're doing right now, and it just works everywhere for everyone. Standards are really key. And stablecoins and digital currency protocols like this are you have to look at them in the lens of standards. And that's why the approach that we've taken with Center Consortium is to establish a consortium, a member governance standards effort that can have technical contributions from third parties that evolve those as standards. And then people look at them as protocols. Like I as a bank might support USDC as a rail, just like I support ACH, just like I support SWIFT, just like I support card processing from Visa. It's just a rail that I'm plugging in. It doesn't mean I have to custody USDC. It's like a standard. It's a protocol people can adopt. And Libra Association's taking the same approach. They're building an arrangement where you have a set of standards that people can implement. And that model, I think the standards model, where you have interoperability, fungibility, you have a multilateral model that lots of people can take place in. It's not just about dollars. It's ultimately going to be about many key reserve currencies, especially as you move into payments and settlement use cases. That's going to be the dominant model. And that's going to be the model that governments collaborate with, that central banks collaborate with rare exception where people vertically integrate. And I think there are probably room for 2 or 3 major global arrangements, just like you have Visa and MasterCard and China Union Pay or whatever you want to think of as those analogies. You're going to have a set of arrangements that define those interoperability standards, and those are going to become in the mainstream use cases, those are going to be the stable coins, if they're called that at that point in time, digital dollars, digital currencies, what have you, that are really going to have the broadest adoption and use.
Yeah, it's kind of funny, Jeremy. People, I even put market cap earlier, but nobody's really talking about integrations with banks and applications and stuff like that. People will always point to that market cap number, and I did it myself when I opened up the webinar.
Completely. And I think it's important, but it's also important to look at the overall ecosystem. I do agree with Jeremy as well, by the way. I do think within that regulated sort of space, and especially once you're looking at payments use cases, it's gonna, the dynamics are, there are strong network effects, and there are economies of scale, whatever you want to. So ultimately, it's going to end up like the cloud market, right? Like you may have an AWS and Azure and a GCP. You're not going to have 50 of them, and I think that is globally. So 2 to maybe 10 max. But there might be other niche use cases where other stable coins and others thrive.
That's fair. And guys, just because we only have 10 minutes left, I want to get to this question from the comments from Macaulay Peterson. This one's for Jeremy. So Jeremy, he said, lately there's been a bunch of new pairs for USD and DAI, like on Coinbase and Gemini, exchanges like that. I guess the question is, are there any recourses for central banks to act against permissionless stablecoins like DAI if they grow uncomfortable with it, like prohibiting exchange or a ban or anything like that?
Yeah, I mean, it's interesting. Obviously, USDC is a collateral type on DAI as well. I mean, that was after Black Thursday and the sort of black swan event that occurred with the price of Ethereum and so it's interesting. I think I don't know what percentage of DAI is collateralized with USDC now, but it's sort of noteworthy to have a stablecoin collateralized with another stablecoin. I think you'll actually see more of that. People pegging things like USDC onto other blockchains, things like that. But in any case, yeah, I mean, I like to believe as a sort of an internet purist that open source software and math are public goods. And, math is incontrovertible. And if someone creates a piece of code and publishes it on the internet and it exists as code on the internet on a tamper-proof, uncensorable public infrastructure, that kind of is a fact. It is what it is. Now, what can happen? So I don't think I think these permissionless algorithmic or crypto collateralized stablecoin projects, I think they're going to grow. And you obviously see new experiments coming out along those lines as we speak. I think those are absolutely going to grow. But the legal and regulatory question, I think, is a real one. I mean, I've been in rooms with lawmakers who are specifically talking about how do we shut down DAI. And I think that's
good luck.
I think that's a real problem. I think this is a critical innovation that for financial inclusion and for the open internet. So I think it's really critical that those projects continue to thrive. But I certainly wouldn't put it past different jurisdictions putting restrictions on what businesses or even individuals might be able to do with those, as they've tried to do in other places with Bitcoin itself too. So I mean, Bitcoin is a permissionless public network that's widely adopted, and it has those attributes, and it's non-sovereign, and continues to grow and thrive. Yeah, that's at least my highlight.
No, that's a great answer. And just another question for you guys, switching gears, because we didn't talk too much about DAI and Maker on ETH. One of the reasons I like DAI, I'll play devil's advocate, is that, I know the system is, open and transparent. I know USDC is audited, stuff like that, but I don't know if people are I don't think dApp developers will ever adopt USDC or Tether to build a decentralized application if there's a link to a company somewhere where they could control it. Maybe I'm wrong there, but I guess, how do you guys think through that? I mean, Dan, also on the trading side of things, I don't know if that really comes into play here, but kind of interested in your guys' thoughts here, because Web3 is going to be huge, and a stable coin underpinning that is going to be very important.
I don't know. I think people are pretty comfy with that. I mean, yes, it's centralized, but like having a stablecoin that's issued via a central authority, I don't think that's a huge leap for people to make that are like specifically interested in decentralization. I think the bigger issue still is like DAI is just young, and like we're still shaking like issues out of that thing. So I don't know. Like, I mean, Jeremy talked a little bit about like the bootstrapping of like putting like USDC in as collateral. I think it's like a really tiny percentage of it still, but
right.
Like it just kind of gives a little more credence to the idea that like this thing's not super battle tested still. So I think using the centralized issued ones, at least as a stopgap, is going to be like kind of the solution for like at least the near term on this thing. That's like at least how I think about it. I mean, like it would be very dangerous to be doing massive amounts of like business in DAI still for like risks that you're not even really like the unknown unknowns that are like sort of still out there. Like people are doing it, but that doesn't mean it's not like risky.
Yeah, I mean, I think if you're building apps for like the broader, mainstream of end users and businesses, right? Having connectivity to the existing banking system in some ways is obviously going to remain really important and really valuable. So I don't see that as at odds at all with people building decentralized infrastructure. In fact, a ton of projects in DeFi and in decentralized apps are using USDC now, a huge percent, more than they use Tether, in fact.
That's big. That's a good point.
Yeah, I in practice, we haven't seen that as a problem. I mean, our developers don't worry about reliance on us. I mean, they view that as a plus, that it comes with banking rails and capabilities integrated, right? And if you look at it, if you're going to build an app of any scale, you're going to have to trust AWS or Azure or GCP anyway. There's a lot of centralized parties that you will have to hook into. I think the critical part is managing that and figuring it out and doing it efficiently to solve a real end customer need. And it is a legitimate concern. You should kick, I think, as a developer, you should kick the tires on the system, whether it's AWS's security protocols or whether it's Scylla's or USDC's peg and how that works. But at the end of it, it's, if you never trust anybody, you're not going to get far in building stuff.
Yeah. No, that's fair. And Dan, switching over to you on the trading investing side of things, you said that you transacted a lot of stable coins. If there was an exchange that settled in dollars and you can still trade Bitcoin, invest futures, options, all that stuff, would you still use stable coins or would you settle in US dollars? Like if interactive brokers will not support or something like that?
So I think it'd be better for having those platforms just let you seamlessly swap, right? Like I think this idea of like thinking about it in like stable coins versus dollars is wrong. You just like want to think about it as like, I want dollar risk and I want to be able to like seamlessly move between like the venues. So this is like really useful, right? Like you can have dollars on Coinbase, but you can just be in USDC and like shoot off at any second you need. And same thing with like FTX, right? Like you can swap in between them as you need it. Like I think you need to get away from the idea of like thinking it's like one or the other. You want this like seamless ability to just like swap between. It'd be great. It'd be great if in my Interactive Brokers account I could just like whip money in from like Coinbase anytime. That'd be like a super useful value add. Like that's a net like step in the like forward, right? Like that's useful activity.
I mean, we're actually seeing like significant financial institutions who are going to be introducing USDC as a rail, so that people who have dollar balances with them can instantly move value in and out using USDC, but where they're not themselves like, we're providing custodial services in USDC. They just have dollars, and just like you have dollars in an account on a ledger, and you want to move it over Swift, you want to move it over ACH, you want to move it over USDC. USDC becomes the rail. And so I think you're going to see more and more of that, and people who turn on USDC as a pipe for interoperability, but not just between crypto trading venues, but between other financial products and services. And I think that doesn't require people to have like, I have my USDC balances and my USD balances, just I have USD, and I have these pipes I can move it across. And public chain settlement is just going to be a continued and really attractive way to do that.
So Tom, that exact flow you're talking about, I had to do like 3 weeks ago, where I went Coinbase to Bank of America to Interactive Brokers, right? And it takes about a day, right? Because it's all wires through the whole thing. But like in theory, that should be done in like
2 seconds,
a minute and a half. Yeah, it should just like, you shouldn't be thinking about it. Like there's not a ton of reasons. So like it's gonna get there. And then it becomes awesome if you can like swap between like non-crypto related things at all, right? Just be like, oh, like I can like send from Interactive Brokers to like pay this invoice, like boom, just like I get you can pay some of that stuff now, but like it'd be very useful to have that. I don't know, and it's going there. Like I mean, there's no reason to not.
I'm with you. Sorry, Shamir.
But I think that's the important thing, right? Like if you're trying to transfer between exchanges, a lot of them support Tether, and some of them also support USDC, and that's kind of that whole space there, right? But if you're trying to say, hey, I want my traditional bank or Interactive Brokers or some other sort of regulated financial institution, they are not going to touch Tether. I don't think any of them have signed up to do that. So now you have to use a USDC, and I think that's the difference that you get, is that world is still way larger, and the ability to sort of interoperate with that and is the value add.
Well, and Tether doesn't trade at $1, right? So like that's like the big issue, is that it's like, right, like you now suddenly the exchange has to deal with like trading this effectively on your behalf, and they got to be plugged into a liquidity provider. It's just like, it's a terrible experience for like everybody. But it's the same reason they don't take crypto half the time, like Bitcoin, ETH, like all the other stuff, right? It's like nobody wants to be dealing with like taxable events and like triggering gains and losses and all this. It's just like a way worse way to do it. Yeah.
I like how on their site, obviously they have like descriptions of each coin, and under USD coin, it's like the historical, it's just a flat line. Because it's always redeemable at $1, so there is no price variance. Now you go on some crazy other venue, people might trade it at a different price against Tether, and there's ARB and that and so on. But it is, by definition, its redeemability and its tokenizability, makes $1. If you actually read the original Center white paper, and you can still read the white paper that's up there, it's all about this interoperability problem. How can I use Venmo to pay someone who uses Square Cash, to pay someone who uses Revolut, to pay someone who uses Alipay, and so on and so forth. And so lighting up all of these, interoperability use cases is really key, and something we're really excited for.
Yeah.
Guys, this has been incredible. I think we're just out of time. I'm getting a message from Mason, but guys, Dan, Shamir, Jeremy, this is awesome. You guys are so down to earth and chill, and I learned a lot. So thanks so much for coming on.